Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial statements of companies and see what their actual story is about to turn those plain numbers into a juicy narrative. And today we're unpacking SMX Security Matters Public Limited Company. And let me tell you, this one has quite a few twists and turns, a real roller coaster of a financial journey. So we're looking at SMX Security Matters Public Limited Company, and they filed their Form 6K covering the month of August 2025. Now, this report gives us a peek into their financial health and operations for the first 6 months of 2025 compared to 2024. Let's jump straight into the numbers because this is where things get really interesting. First up, general and administrative expenses for the first 6 months of 2025. These jumped to a whopping $18.7 million. That's a huge increase of over 150% from $7.2 million in the same period last year. What caused this massive jump? Well, a big chunk of it is due to share-based compensation, which went up by over $12 million in the same period last year. What caused this massive jump? Well, a big chunk of it is due to share-based compensation, which went up by over $12 million. Then we see selling and marketing expenses also soaring. They went from just over $300,000 to $14 million. That's more than triple. Again, a significant portion of this increase is also attributed to higher share-based compensation and increased wages. Now, research and development expenses actually saw a slight dip of about 3%, going from $1.7 million to $1.6 million. This is despite an increase in share-based compensation for R&D staff offset by lower wages and fewer service providers. Something new here is amortization expenses, which came in at over $2 million for the first half of 2025. This is because they started recognizing amortization for their intangible and technology assets as they're now considered in commercial use starting from July 2024. All these increased expenses led to a much bigger operating loss. For the first 6 months of 2025, the operating loss was $23.8 million compared to $9.3 million in the same period in 2024. That's more than doubling their operating loss. On the flip side, finance income really boosted their results, growing from $1.6 million to nearly $10 million. This surge is thanks to a significant increase in the valuation of their warrants and also some favorable foreign exchange rate changes. However, finance expenses also shot up from $3.2 million to $10.7 million. This is due to higher revaluation of warrants credit for a note liability and interest on a loan. So when you put it all together, the net loss for the first 6 months of 2025 was $24.6 million. This is a substantial increase from the $10.9 million net loss in the first 6 months of 2024. Net loss attributable to equity holders specifically went from $10.7 million to $23.6 million. And that brings us to losses per share, which is quite stark. Basic and diluted loss per share attributable to shareholders was a negative $29 for the first 6 months of 2024. This massive jump in the negative per share value is largely due to several reverse stock splits that have occurred. You can see that history of reverse stock splits is quite significant. They had a 1 for 75 split in July 2024, then a 1 for 28.5 split in January 2025, and even another 1 for 7 split in August 2025, and even another 1 for 7 split in August 2025. These splits are often done to meet minimum share price requirements on stock exchanges like Nasdaq, but they can make per share figures look quite different, and in this case they've made the per share loss appear much larger. Now let's look at where the cash is going. Net cash used in operating activities was $4.1 million for the first 6 months of 2025. This is a slight decrease from $4.5 million in the same period in 2024. The reduction in cash burn from operations is mainly due to a significant amount of share-based compensation, which doesn't use cash directly but increases the reported loss. Financing activities provided $2.7 million compared to $4.6 million in the prior year. This decrease is mainly due to less money coming from warrant exercises and the absence of a large convertible note issuance seen in 2024. This brings us to a critical point, the company's cash position. As of June 30, 2025, they had only $750,000 in cash and cash equivalents. Now, since then, they've raised about $2.1 million in July and have agreements for another $5 million in August with an option for another $6 million. But even with these recent capital raises, the overall cash situation looks very tight. And that leads to a very important part of the report, the substantial doubt regarding the company's ability to continue as a going concern. They have accumulated losses of $106 million plan to fund operations through selling more securities. But there's no guarantee this financing will happen or be on favorable terms. This means the auditors are flagging a big risk that the company might not be able to keep operating. Let's look at some of these financing deals. The company entered into a deal in August 2025 to issue and sell promissory notes for up to $11 million. This money is supposed to come in installments. The notes carry a 20% original issue discount, meaning the company gets less than the face value. They also have a conversion option where investors can turn the debt into shares at a price tied to the market, but with a discount. Plus, the company faces strict restrictions on issuing other equity securities without investor consent. Before that, in May 2025, they had a similar convertible promissory note deal for $6.9 million, which resulted in about $5.5 million in cash. Interestingly, all of the principal from this note was converted into ordinary shares after June 30, 2025. They also had a smaller deal in March 2025 for around $300,000 with a 12% annual interest rate and a repayment schedule starting September 2025. This note also has some pretty serious default clauses, including the possibility of conversion into shares at a discounted price. Then there's the Abri Advisors loan from December 2024 for $1 million, which had to be repaid as $14 million by June 30, 2025. This loan is quite restrictive with clauses about new debt issuance and mandatory repayment if 3% they've made some payments but are currently negotiating to postpone the rest. Looking at past financing deals, the Alpha April 2024 promissory note for $2.25 million was issued at a 10% discount with 12% annual interest. It seems Alpha converted most of this debt into company shares during 2024 and the first half of 2024 and the first half of 2025, effectively settling the entire outstanding balance. Similarly, the Alpha July 2024 promissory note for $1.15 million issued at a hefty 35% discount was also fully converted into shares by Alpha in the first half of 2025. The company also restructured a secured promissory note with PNB Partners in September 2024, ultimately extending maturity dates and increasing interest rates to 18%. Now let's talk about legal matters. In January 2024, they had a contract with RNI Trading for a NATO member state, but RNI Trading later sent a termination notice and demanded arbitration. SMX believes the termination was unlawful and they are currently in an arbitration process. Both sides have filed claims, and while the company plans to defend itself vigorously at this early stage, it's hard to assess the chances of their claim or the outcome. The company also has a license agreement with ISARAD, which involves future royalties based on gross sales and payments in case of mergers or acquisitions. An amendment in 2023 involved issuing options to ISARAD and a 1% fee on certain funding events. They're also exposed to foreign currency exchange risk. Their operating expenses are in Israeli shekels, Australian dollars, and Singapore dollars. The Israeli shekel devalued against the US dollar in the first half of 2025, while the Australian dollar also saw a devaluation after appreciating earlier. The Singapore dollar also devalued significantly. The company does not engage in currency hedging, so these fluctuations can impact their financial results. There's a lot to unpack here. SMX is clearly in a high-growth venture technology that aims to revolutionize industries by providing material transparency and tracking. Their business model seems forward-thinking, focusing on sustainability and the circular economy. However, the financial picture is concerning. The company is burning through cash at an alarming rate, with operating expenses far outweighing revenue. The massive increase in general and administrative costs primarily driven by share-based compensation, while aiming to incentivize talent is also significantly impacting their bottom line. The fact that they've had to enact multiple reverse stock splits to stay listed on Nasdaq signals a struggle with maintaining a minimum share price, which often points to broader market concerns about their valuation and future prospects. The substantial doubt about their ability to continue as a going concern is the most critical takeaway. This means their continued operation is uncertain without significant future funding. Despite bringing in new financing rounds, it seems like a constant need for cash injections to stay afloat. The restrictive terms of some of these financing deals also raise questions about future flexibility. The R&I trading legal dispute is another significant risk and ongoing arbitration process where the financial impact is currently unpredictable. Overall, SMX is pursuing an ambitious technological vision but is facing immense financial and operational challenges. Their strategy to become an industry standard is commendable, but requires substantial investment and a much longer path to profitability. The immediate focus needs to be on stabilizing their finances, managing expenses, and securing sustainable revenue streams to overcome the going concern issues. Alright, that's our breakdown of SMX Security Matters Public Limited Company's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.